Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 6th of November 2015 and we're going to cover today's announcement of the US Non Farm Payroll Jobs Report. The Bureau of Labor Statistics reported today that non-farm payrolls grew 271,000 for the month and the headline unemployment rate declined to 5%. Economists polled by Reuters expected the non-farm payrolls report to show 180,000 new jobs added in October, with the unemployment rate to hold steady at 5.1%. A broader measure of unemployment that includes those who have stopped looking as well as those working part-time for economic reasons declined to 9.8%, the first time it's been below 10% since May 2008. The jobless rate is now at a level many Fed officials view as consistent with full employment. Professional business services led sector gains with 78,000 new jobs last month. Administrative and support services added the most of the group with 46,000 jobs. Health care grew by 45,000 workers, retail added 44,000, and restaurants and bars increased by 42,000. Construction also added 31,000 workers, though the mining sector lost 5,000 jobs. Government payrolls grew by 3,000. Growth in average hourly earnings jumped 9 cents, representing a monthly gain of 0.6% and an annualized increase of 2.5%. The average work week remained at 34.5 hours. Market traders immediately began bracing for the possibility of a December rate hike. Mark Hamrick, senior economic analyst at bankrate.com, said, "We can check off a number of good news boxes with this report. It's hard to find any bad news boxes to check off." Shortly after the report was issued, Chicago Federal Reserve President Charles Evans told CNBC the much stronger than expected report is very good news and supports his 2016 economic outlook of 2.5% growth. J.J. Keenahan, chief strategist for TD Ameritrade, said about interest rates, "It looks like the market is telling you it's fairly in the cards. One thing we know about rate moves is once they move at a very quick pace." The US dollar gained 1.4% against the euro as currency traders began pricing in higher rates. Robert Craig, private client investment manager at NB Capital in London, said, "In the short term, this is likely to trigger increased volatility. But if rates edge up and the world doesn't end, markets will start gaining confidence. For a while now, it has felt like the Fed has wanted to clear the psychological hurdle of that first rate rise, and it's now got that opportunity." So what has happened to gold and silver as a result? Well, at the time of producing this video, gold stands at $1,089. That's $53 down since the start of the week. And silver stands at $14.75, down some 79 cents on the week. We predicted some time ago that once October was out of the way, we would see gold and silver continue its decline, though we were a little more supportive of gold than silver because of the number of black swans swimming around. Well, this is exactly what has happened, and further, there now becomes a real possibility that rates may rise in December. Whether they do or they do not, the impression the markets will have is that they will. And as a result, the dollar has strengthened and may continue to do so, again as we forecast. The result is not good for either gold or silver at this stage, though it could be argued that if the economy is genuinely improving, then silver will become a little more robust. We still see gold falling below the 1,080 level and move closer to the $1,000. And silver, having already broken below $15, will certainly test the early $14 level, in our view, and could quite possibly move into $13 territory very soon. Next week will give us all an indication as to how the markets have digested this news, and as further economic statistics are revealed in the remaining weeks of this year, a very firm trend for 2016 will become established. We hope you found this video helpful and informative, and would appreciate it if you would give it a thumb up, comment, and if you haven't already done so, please subscribe. Disclaimer. Silver Illuminati owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we're not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.